Hey guys, what is up? Welcome back to my channel. So in today's video, we'll be talking about support and resistance and how to draw support and resistance lines properly. So people have asked me, how do we identify support and resistance level on the price charts? And once we found this level, how do we draw them? So in today's video, I'll be covering all of that. I'll be going through the theory first so that you guys understand the concept and the psychology behind support and resistance indicators. And then I'll be going through live examples as we take a look at real price charts and eyeballing these charts to find support and resistance and then drawing them. So make sure you stick around to the end because you want to see how you can use this support and resistance lines in your own investing and trading. So with that, let's dive right in. Okay, I'm on my screen. Let's get started. So let's start with the definition of support and resistance. So support and resistance lines or levels are predetermined price levels that the stock tend to reach and reverse. So support levels act like a price floor whereby prices are unlikely to go lower and past that point. And then resistance level are like price ceiling where prices are unlikely to go higher and past those levels. So that's the definition of support and resistance level. So how do we identify support and resistance level and then draw them? Okay, so before I go on, there are two important things for you to take note. The first is that you can draw support and resistance level just by drawing a line across 2 points where prices reach and reverse. So there are 2 points where prices touch and reverse at the top, so that's where we draw a line connecting the 2 points, and that is for the resistance level. So for support, we draw the lines across the 2 points at the bottom where prices reach and bounce back up. So that will be our support level. However, for the support and resistance to be more reliable for me at least, is by connecting 3 or more price points. So I want to see at least 3 price points before I'll identify the points as resistance. So at least 3 points for support, and of course if there are more than 3 price points, the better. So the more times that prices touch and reverse, the stronger the support or resistance it will be. So that's the first thing to take note. So you can technically draw a support or resistance just by having 2 price points, but I personally draw if I see 3 or more points. So the more points, the more reliable the support or resistance line is. So for support, we also want to see the prices touching and reversing back up from that price point. So we want to see 3 times. So 3 price points for resistance level. So 1, 2, and 3. And 3 points for support level. So 1, 2, and 3. So of course, if there are more than 3 price points, the better. So the more times that prices touch and reverse, the stronger the support and or resistance level is. So that's the first thing to take note. So you can technically draw a support or resistance just by having 2 points. But I personally draw if I see 3 or more price points. So 3 or more is because it will be more reliable. So the more points there are, the more reliable the support or resistance line is. The second thing to take note is that support and resistance levels are not exact price level, but rather more of between a range of prices. So what do I mean by that? If you see the picture on your screen, that is a support level because prices fall, and once it reaches that level, it reverses and bounce back up. So it doesn't reverse and bounce back up once, not twice, but 3 times. So when you see that on your chart, that is a support level. But notice that prices do not stop exactly at the support level. Instead, they either go past it by a bit or below the support level or hover just above the support level and start reversing. So prices don't stop exactly at the support level in real life. So theoretically, support level is just when prices reach that certain price point, you'll bounce back up or bounce back down, depending whether it's a support or resistance level. But in real life, prices do not reach exactly at that level and reverses. It may go below it, slightly below it, or slightly above it, depending on the support or resistance. Therefore, while we draw our support level at a fixed price of 133.11, the support level are in fact a price range or zones rather than exact price levels. So let's take a look at another example. So here's an example of a resistance level. So a resistance level, we learned that it acts similar to a price ceiling where prices reach and reverses back down. So do you see the resistance level? Again, notice that prices do not reach exactly at our resistance level and reverses back down. Instead, it either moves slightly over it or slightly below it. So that's the two things to take note. The first is that we want to see prices touching a price level at least 3 or more times before we draw our support or resistance level. And the more times that prices touch and reverses, the stronger the support or resistance level. And the second is that support and resistance level are not exact price points, but rather a price range or area where prices reach and reverses. So now that you understand the definition of support and resistance levels, you might be wondering, why do prices do what they do when they encounter support and resistance level? Like, why do prices continue moving, but the moment they reach the support and resistance level, they stop and reverse? So do you ever wonder why? Okay, so to explain this to you, let me give you an analogy. So have you ever seen passerbys who just happen to walk past, and when they see a queue forming, they would join a queue without knowing why they joined the queue? Or have you experienced it yourself? So you join the queue without knowing exactly what you are queuing for, but since other people are queuing, it might be or it must be something good like a sale or something. So yeah, so from where I'm from Singapore. This happens quite often, and I don't know where you're from, whether this also happens where you're from, but it happens here. So this is kind of similar to support and resistance level. So where prices reach and reverses the first 2 times, maybe some of the investors and traders have had some insights or ideas that other investors and traders have not caught on yet. So this minority of investors and traders found that maybe at that price level, the stock is either overpriced or underpriced and start selling or buying against the market's momentum. So what this does is that it reverses the price once prices reach that price area. So these investors and traders are like the early people in the queue. So once prices reach those support and resistance levels and continue to reverse, more and more investors and traders see that pattern and that a support and resistance level is forming. So what do these investors and traders do? They would start selling when prices reach near the resistance level and start buying when prices are near the support level. So more and more investors and traders would see the pattern and invest and trade accordingly, even though they might not know why prices actually reverse at that level. Because at the end of the day, it is what is reflected on the price charts that matters. So when more and more investors and traders see the pattern, that is similar to the people joining the queue without knowing fully what they are queuing for. But they know that if enough people queue, then it must be something good. So if you are an investor or trader, when you see a resistance level approaching, what will you do? You would sell your stock if you own the stock, because you know that prices are likely to reverse and start declining, right? So as many investors and traders see this resistance level, they would also sell their stock. So when there are more sellers than buyers, prices will then fall. So that is why when there's a resistance level, prices tend to reach that level and then fall. So similarly for support level, let's say that you are monitoring that stock and the stock has been falling, but the stock is coming close to a support level. What will you do? You will buy the stock right, because you know that there's a high probability that the stock will find support at that level and start to advance from there. So many investors and traders will also want to buy at that support level. So at that point, there tends to be more buyers than sellers, and this will drive prices up. And that is why prices tend to reverse and rise when there's a support level close by. So that is the psychology behind support and resistance level. Now that you have learned and understand the definition and psychology behind support and resistance level, you know the theory part. So the next part, we'll take a look at the charts to identify support and resistance level so that you can put whatever you have learned into practice and into your own investing and trading. So I'm on my trading platform right now and on the price chart. So the trading platform that I use is Thinkorswim. So there are many other available trading platforms out there on the internet. So you can use whichever. But for me, I personally use Thinkorswim because that's the platform that I'm most comfortable with. Okay, so this is the price chart of the spider. The spider or the SPY is the US ETF. On these charts, can you identify where the support and resistance level are? So take a moment to pause this video and identify this support and resistance level by yourself. Alright, so have you identified where they are? Okay, great. So I can identify one support level already. So there's one support level here. So I'm going to draw the support level here. So remember, when we learned earlier on, a support level is when prices tend to reach and bounce back up on 3 or more times. So the first test is here, 1, second time, the third time, and then the fourth and fifth time before it finally broke through the support level. So that is the support level. So again, notice that when I draw the support level here, notice that prices don't exactly reach the support level and bounce back up. It went slightly below it and then bounced back up. And then for this one, it went slightly below it and bounced back up. And this one, it reached exactly at that point and bounced back up. So in real life, the prices don't and we won't always reach the support level and exactly at that support level at the price point and bounce back up. Sometimes it might go slightly below it, sometimes slightly above it. So those are the things to look out for in a support level on our charts. So let's take a look at resistance level. So let me take a look at the charts. Okay, I can identify one resistance level. Can you identify it? Okay, so great. So the resistance level will be around here. So as you can see, for this area, the first test was here. So prices touch and it reversed back down. So that's the first time. Then this is the second time, the third time, the fourth time, fifth time, and sixth time. So as you can see, this resistance level is quite strong. So the sixth time, it went down, it went up, the 7, the 8, the 9, the 10, and before the finally at the 11 point, it broke past the resistance level. So since prices test and did not manage to break past that resistance level for more than 3 times, and in fact it couldn't break past it for more than 10 times, so it indicates to us that it's a very strong resistance level. So notice that when prices reach the resistance level, it fall back down, reach the resistance level, fall back down, reach the resistance, fall back down, and so on and so forth. So that is a resistance level. So another thing to take note is when prices break past the resistance level, what happened? Do you notice that when prices broke past the resistance level become a support level? So it became a support level, and so when prices reach back down to the new support level or the old resistance line, prices bounce back up. So it reached the new support, it bounced back up. It reached the new support, it bounced back up. So another thing to take note is that when prices break past the resistance line, it tends to become a new support level. So similarly, if prices break below the support level, the old support level will tend to become a new resistance level. So that is support and resistance level. So let's take a look at another example. Let's take a look at Alibaba. Okay, so on this price chart, can you identify any support and resistance level? Okay, so I can identify some support level. So here's a support level. So as you can see, this is the first test, the second test, third test, fourth test, fifth test, sixth test, seventh test, eighth test, ninth test, and it broke below. So that is a support level. So let's take a look for resistance level. Are there any resistance level for this one? Okay, for this Alibaba, I cannot identify any very strong and clear resistance level. So let's take a look at another one, another example. So let's say for Google. Okay, so for Google, I can see one support level here. So we draw it here. So you can see this is the first test, then go up. Second test, it went up. Third test, it went up. Fourth test, it went up. Fifth test, it went up. Sixth test, it went up. Seventh test, it went up. And so on and so forth. So that's the support level. So for resistance level, for Google, let's take a look. maybe this one. But this one is not very strong and clear. Okay, so for Google, I also cannot identify any clear and strong resistance level. So let's take a look at another example. Amazon. Okay, so Amazon, we can see there's a resistance level here. So there's the first test, the second test, and then the third test here. So that will be the resistance level. Let's take a look whether we can identify any other support and resistance level. There's a support here. So we draw it here. So you can see that's the first, the second, the third, fourth, fifth, and then it went up. So that's the support level. So there's a resistance level here also, as you can see. So okay, let me zoom in a bit. So one test, second test, then it broke up for a while, then it went back down. Third test, fourth test before it broke out and finally moved forward. So that is the resistance level. Alright, so what are the key points that we have learned in this video? So the first is that we understand that a support level acts like a price floor. So when prices fall to the support level, it tends to reverse and climb back up. And resistance level, on the other hand, acts like a price ceiling. When prices rise to the resistance level, it tends to reverse and fall back down. So we also learned that the more points that prices touch and not break past that level, the stronger the support or resistance level it is. So the next thing we learn is that support and resistance levels are not at specific and fixed price points level, but rather over a small range of prices or price areas. And we learn about the psychology of why prices act like they do when they reach support and resistance level. And finally, we learn how to identify actual support and resistance level on our price charts and how to draw them. That is it, guys. I hope you liked the video and have learned a lot. If you have liked the video, give us a thumbs up and subscribe to my channel, because next week I'll be talking about moving averages and how to use them to help you invest and trade and determine the trends in the market. So subscribe and turn on the bell icon so that you'll be notified when I release this video next week. I'll see you in that video. To your financial success.